How's everybody doing today? You can chat if you want. Hopefully you guys are doing okay on a pretty big down day. You guys got any positions on? I was clear of a few condors. I in classic fashion closed out my double calendar hedge yesterday. Felt like a star, just getting out with a small loss on that VIX mean reversion. And I'm an idiot. So is what it is. It's all good. It's fun times. We're not here. Yeah, the inverse iron condor was tough. Yeah, I'm not going to tell you the math on how that double calendar was worked, but you would have to use multiplication. That'd be the answer to it. So, with that being said, hopefully we can repair. Hopefully all your positions end in the green and everything goes well today. So we'll get started. As always, what I'm about to say is not financial advice. Options involve risks. They're not suitable for all investors. The backtester is backward looking, not forward looking. So everything presented today is simply for entertainment purposes. As always, consult with your financial advisor if you have any questions about options and the risks that they ensue. With that being said, I'm going to share my screen. Cool. Can you guys see my screen? With a big red candle, it looks like, on it. Sweet. Thanks, man. Okay, cool. So what we're doing today is we're going to continue down our path of signal testing. We came out with this cool signal tester about a month ago, I think, maybe 2 months ago. And I think people are just now starting to see the power of it. And so what we're going to do today is continue down our path a little bit and look at a vanilla strategy. Last time we did this, we looked at VWAP. And today we're going to look at another vanilla strategy. And the indicator itself, if you scroll up, let's see here. Yeah, if you scroll up to December 1st, I posted the link to this provided to us by our very own Lord Calendar in here. Wizard. And with the caveat that this is for educational purposes. This is like super vanilla. Don't use this indicator. This is just for testing stuff. But today we're looking at a simple EMA cloud strategy, a long short EMA cloud strategy. So first off, I'm going to post this in the link, this link to this YouTube video. Have you guys ever used EMA clouds before, moving average clouds? Anybody ever played around with them? I'll take that as a no. Okay. 30 Anonymous is typing. I like it. Sweet. Okay. Let me show you real quick. I'm going to go to Trading View real quick and just show you what it is. So can you see my Trading View window? Can you guys see that window? Don't see the window. Sweet. Okay, let me do this then. Make it easy. Let's go to SPX. Okay, can you see that? Can you see my trading view window now? Cool. So if you look, these little clouds right here, red, well today it's just red, that is a moving average cloud. And basically, I'm going to let you guys look it up. I'm not even going to get into the details of it. But the theory, the strategy basically is this for this vanilla that you should not trade. When these turn red, we're in a downtrend. So adjust accordingly. When they are green, they're in an uptrend. So adjust accordingly. Does that make sense? Pretty straightforward. There's lots of nuances to it, but that's the equivalent, right? I'm not going to get into. Look it up. It's cool. So those are the trends, right? And what we're going to do today is simply, and shout out to Wizzy because he actually sent me this TrendSpider article about EMA clouds. So you can look them up, research them, all that jazz. But what we're going to look at today is what we can do with that using options. And so what I've done, yeah, shout out to Wizzy, for sure. What I've done is I've taken this and I've broken it down, and we're going to look at this from a long and a short and just look at some option strategies with it. So again, move average cloud. If it's green, we're in an uptrend. There's some crossover stuff that happens, but just green, uptrend, red, downtrend, right? Long, short, just for testing purposes. Because this is entertainment and not financial advice. So what we're going to do is go to the beautiful option Omega, and we're going to look at some EMA. So what I've done is I've exported from TradingView 30 minutes, a 30-minute time frame of, I believe year to date, of a very basic should not trade EMA strategy. I say it just because you should look it up and research it before you do it, and there's some caveats to it. This is just for the testing purposes of it. So what we're going to do is we've exported that, and we're going to look at a couple different strategies. So first off, and please, before I jump in, I've got a really, really good cigar today, and I've got a coffee mug. And you might think, well, that's coffee in the middle of the day. Nope, that's orange soda, my friends. We're just drinking orange soda outside. So I'm feeling really good right now. There's no alcohol in it, it's just orange soda. So if I'm moving fast, if I'm a little jittery, just stop me and be like, you're not speaking English. Stop. But otherwise, we'll just keep going. So put your questions in the comments and all that stuff. So this first test is the EMA crossover. So at any point when it turns from red to green, the clouds, okay, it's crossed over from a negative to a positive environment, trending environment, or vice versa, from a positive to a negative trending environment. And what we did is we're going to, with this test, just take the long short position. So if it goes long, just buy the strike, the 50 delta long. If it goes short, just go the 50 delta short, right? 50 delta put, 50 delta call. What should we take away from that test? Any takers from this test so far? Not exactly one that we should write home to grandma about. Grandma doesn't want to hear that crap. Grandma's got things to do, and that is not one of them. That's right. Super entertaining. Isn't that entertaining? Isn't that super entertaining? So, it's my favorite type of entertainment right there, just trash. So, that's a no-go. So just buying the long and short doesn't seem to work. But as you can see here, we've got some other goodies. So this one, then I took, so that was the long and the short, just exported together, long short strategy. Next up, I have exported just the long strategies. So let's look at those real quick. So it crosses over from a red environment to a green trending environment. Okay. What are we doing here? We are putting a call calendar on. So it crosses over. When it crosses over, put on a 25 delta 01 calendar, a call calendar. Buy the 25 delta call. Sell the 25 delta call, buy the 1 day out 25 delta call. And we're going to exit at a profit target of 25%. Well, as you can see, you actually pretty good win percentage, but it doesn't account for the losers, right? So those are the losers, and I'm going to put this in here, although I'm not even going to share the first one because that's ridiculous. But I'm going to share these. So next up is let's get into the winners. So one more bullish. This is a bullish crossover. So on the moving average cloud turns green. What do we do at that moment on that long signal? What we're doing in that moment is we're selling a 25 delta put. This is 0 day, and we're buying a put 25 points out. And so this is a bullish strategy, a put credit spread, right? And as you can see, that's actually a pretty good test, right? I mean, again, an entertaining test because I'm certain you guys and ladies in here can improve on this greatly. You know, I'm a simple craftsman. I'm not a smart man, and unlike Forrest Gump, I'm not even sure I know what love is. But I can show you some tests. So this is a put credit spread. The interesting thing about this one is the exit condition. The only exit condition is a stop loss. So otherwise, we're letting it ride to expiration. So stop loss is $3. Otherwise, we let it go. As you can see, it's pretty good. I'm going to copy that one. Any questions about that one? And as always, I say this all the time, but like the reason we share these for people who are subscribed to Option Omega is I'm not joking when I say you can vastly improve this. I have no doubt in my mind. This is not me running 6,000 permutations of this. This is me finding profitable ones to show. So I guarantee you there's ways to go about it that are smarter, better. I encourage you to do it. And that's why we share those links. Now we'll take a little side journey real quick because it's Christmas, and we'll do some more Cigar Lounges on this. But I want to show you the cool new hot feature that we just put out last week in this one. So we look at the trade log. Let's find a winner randomly. Let's see here. December 2nd. We're going to click on the show trade replay. That's hotness. That's what the kids call dope, I think. I'm sure. That's what the kids call dope. And what is that showing you? That's showing you through time how your trade did compared to the SPX, compared to the underlying, and then compared to what the VIX was doing in the process of it. So this is a bullish put spread, right? So you've received credit, and then through time on a credit spread, you want it to go, the price to go down, right? Because you want to buy it back for cheaper or let it expire. And so in this case, this graph makes sense, right? The price went up, the VIX went down, therefore your trade window. That's good to know, Wizzy. So you've put yourself a target on your back. Any questions about moving average cloud? Don't bother Lord Calendar. But as always, he's been very gracious with his knowledge. So if you have any questions about that, you can maybe put it in the old trading channels we got. So that's cool. Replay's cool. Anyway, just wanted to show you that. On the loser, what do you think is going to happen? Well, if this is a credit spread, we imagine the price is going to go down, VIX is probably going to go up a little bit, and your price is going to go up. See what happens? Price goes down, yep, or underlying goes down, VIX stays the same, slight rise, that's fine. And then your trade, boom, goes boom in the night. So let's keep going. Those were the bullish ones. Now let's look at the bearish ones. So the cloud turns red. We're in a downtrend. What are we going to do? Well, let's see what happens if we just flip it. So now we're going to sell the calls. Now what's interesting about this, straight away, let's go back real quick and look. If you look at these two tests, a 25 delta on the bearish and a 25 delta on the bullish, that actually, the similarity to this P&L and the win rate and all that stuff, a little classroom time. What do you take away from that? Are there any takeaways from that? To see that with this strategy, when you go bearish on a call spread, or bearish on a put, bearish on a call spread, bullish on a put spread, that the win rate and the P&L is largely the same. Does that tell you anything about that strategy or options in general? I'll tell you what it tells me. It tells me that it tells me two things. A, there might be some validity to that strategy. Again, not advice, just entertaining. But it from a knowledge standpoint, it makes me think, there might be some validity to that strategy, and that strategy being out of the money spreads. Out of the money spreads. And what with the moving average cloud, what is the whole point of it? It's a trend. It's going down, it's going up, and you're kind of like, I'm about to use my hands. This is just stupid. I've got nothing. If you go up, right, it's trending up. What are we doing with that put spread? Just doop, right? And as it goes up, it's losing value. Like down, use my hands. You guys get it. Anyway, so go back to that. The bearish, let me resave this to share it for you. Put that in there. Pretty cool. Okay, now let's go back. And I will show you one more. And this is interesting. Again, looking at signals, looking at basic strategies. As I said with the VWAP, don't take this as the strategy idea. Take this as like how you test what up until now has largely been plays for future traders. Now you can look and test option strategies with it, which is really cool. So last one is we're going to do a put calendar. So the moving average goes from green, it's crossed over, and now we're in a downtrend into the red. Remember, 30-minute time frame on this. And what happens when we do that? We're going to buy a 25 delta put calendar, 0-1. So we're selling the 25 delta 0 day, and we're buying the same strike 1 day out. No exit conditions other than this is the profit target. And as you can tell, that one does pretty well as well. 62% of the time, little higher drawdown, right? And as always, showing off the new trade replay, you want the price to go up, right? You want the price to go up because you bought it. So if you look at it, this was an interesting day. This is the beauty of the trade replay in my mind. Days like this, where it's not necessarily just super trendy. It's a little trickier. Look at the price action versus the trade. Right, makes total sense. VIX was VIX didn't actually pop. Right, this is just kind of staying put. But the price actually went up, right, at this point. And at the very end, you got out at that 25% profit target. And so that trade replay is nice just because you can look at it and you can see through time what the movement was, what it actually did. Any questions about that? Cool beans. Last one. So now to curve fit a little bit, the bullish, the call calendar didn't work, but the put calendar did. So what we're going to do is we're going to test the put calendar, the call spread, and the put spread. And just for the fun of it, let's say since the puts have two, let's do 50 and 50. And then on the bullish one, just for the heck of it, don't ever do this, let's do 100. Let's see what happens. Pretty massive drawdown. So you'd want to dig into it. You'd want to dig into that, but just for the I'm going to share that with you. Pretty interesting. You have a CAGR that is the industry would die for, with a massive drawdown. As always, would you trade through that? Would you trade through a 68% drawdown? That's up to your personal trading style and things like that. But something to play around with, something to be interesting. As always, it's an idea generator. It's not meant to say like this strategy is going to make you $1 million, bruh. It's just going to help you be a better trader by looking at different indicators, different strategies, how people trade the market. And again, how up until this point, largely futures traders have used these indicators. We can now play around with some option strategies as well. So it's pretty darn cool. I think it's super useful. And we will continue down the road because we have some more indicators to look at. So I'm probably going to do 2 cigar lounges next week. And we will have some Christmas goodies mixed into it and go from there. So with that being said, do you guys have any questions or anything? Okay. Well, if I don't see you before, I hope you have a Merry Christmas and Happy Hanukkah, Kwanzaa. And otherwise, we will plan on seeing you next week. We'll do 2 next week, and we'll jump into some more indicators. So hope you have a good day, guys. See you soon.